Good morning, and let's talk about the retail space and how Vinnii Supermart actually performed in Q1 FY22. So Q1 FY22 overall, when you look at the earnings, the revenue were in line with expectations. Obviously, we do have an idea what to expect in terms of revenues because the company comes out with an operational update. But where the earnings were actually a miss this time was the profit as well as the margin fronts. Both were a miss for DMart this time around. Now, revenue surely in line, seeing a 31% growth, 31.6% to be precise, and revenues came in at 5,031 crores. Now, obviously, there's a low base which is also helping and aiding the revenue growth. And when you look at it on a sequential basis, that's a quarter-on-quarter basis, the revenues have actually seen a decline of around 30% in their revenue growth as well. And compared to pre-COVID sales, also their sales are down by 13% compared to pre-COVID sales as well. So surely there is some pressure building in on the revenue, and this time when you look at it, April and May, the second half of April as well as May, the restrictions, especially during these months, were much more severe, and the impact was much more severe than what anyone was expecting. Now, obviously, the company has highlighted that they have lost a significantly more number of days due to this higher restriction on the number of hours, working hours for store operations, and different state has different restrictions coming in as well versus last year. So obviously, they lost more number of days this time around during this period as well. So that is something that impacted the overall earnings. But one positive sign that they did show is the customer footfalls actually for the company versus last year were translating into higher sales. They saw more customer footfalls this time around. So that surely something that overall supported the sales for DMart as well. Now, in terms of margins, why the margins were lower is obviously the discretionary categories. That's a margin accretive business for the company that surely had seen a severe impact this time, and that is something that impacted the overall margins, and that's why the margins are at 4.4% versus what we were expecting of 5.5%. Though when you compare on a year-on-year basis, obviously there's an expansion coming in because of the low base, but from what the street was expecting, it is much lower on those terms. Now, other than that, management commentary is highlighting certain important points. One, they said that a store needs to be open at least for 45 days without any uninterrupted operational time to get back to pre-COVID sales. So, if a store actually works for 45 days straight without any restrictions on operating hours or shutting on Saturdays, Sundays, without any such issues, then the store could reach to pre-COVID levels very soon in 45 days time. So that is something that we should be keeping an eye out on. 45 days without uninterrupted service, and we could see the stores coming back to pre-COVID sales as well. Now, obviously, they've highlighted that they've not seen any significant impact coming in on the supply chain during this quarter as well as the inventory is also gradually moving towards normal sales as well and normal levels as well. So interesting facts coming in over there, and that is something that we will be keeping an eye out in terms of recovery coming in the quarter 2 as well of FY22 and how it actually pans out for DMart.